Imagine we're back in 2010. You're just watching TV on a Friday night and you decide to order a pizza because why not? So then, after calling and picking up your pepperoni, you decide to sit back down to enjoy the movie you were watching and just wait for the pizza to arrive. However, a couple of minutes go by and you then realize that you don't have any cash at home. So when the driver actually comes home, you decide to offer him something of little value, such as some gold coins or some very light piece of jewelry that you can exchange for the pizza. Well, imagine that after this exchange, a couple of years go by, and then on the news, you actually find out that that exact item you traded is now worth millions and millions of dollars. Does this sound realistic? I don't think so. However, meet Laszlo. He is one of the most famous people in the crypto space, and I think it's for the wrong reasons, some may argue. But he conducted the first known real-world transaction using Bitcoin by exchanging over 10,000 Bitcoins for 2 large pizzas from Papa John's. But let's look at this from Papa John's perspective. In 2010, they made $41 of these 2 pizzas, which is an okay price. However, if they held these 10,000 Bitcoins all the way up to now, in 15 years, they would now have over $100 million just from the sale of 2 pepperoni pizzas. That equates to a yearly CAGR of 167%. Just to put this number to context, the S&P 500 has an average CAGR of 10%. This is over 16 times that CAGR that the S&P 500, which is a worldwide acknowledged return, has actually performed in the past 15 years. But now everyone knows and has heard stories of crypto millionaires and people becoming ultra wealthy just from Dogecoin or from some altcoins actually exploding in a matter of days. However, I wanted to investigate, is crypto a space where you can only have luck and get ultra wealthy from a random coin? Or is this a new asset class that deserves a spot in your long-term portfolio? Well, before we actually answer that question, let's define what a cryptocurrency actually is. As the name suggests, a cryptocurrency is just a type of digital currency which honestly has no intrinsic value, as it is only worth what people are willing to pay for them in the market. That means that if no shop or nobody is actually willing to accept your Bitcoin as a form of payment, well then what value does this Bitcoin actually have? And despite these currencies actually not having an intrinsic value, there are a lot of factors which are actually influencing the price, such as the coin supply. This is whether the coin is limited or whether there is a decreasing number of coins year after year. Because, for example, in the case of Bitcoin, there is a Bitcoin halving every couple of years. That means that the supply of Bitcoin actually decreases by half. When there is constant demand and there is less supply, well, that means that the price will go up. Next is the utility of the coin, what a token actually does. There are many tokens that allow you to pay for services, some other that allow you to enable smart contracts, and even others that are just used to create platforms, tokenize assets, and hundreds of other types of uses. Well, the more uses or the better the utility of a coin, the higher value that is perceived from that crypto. Next is the tokenomics, which is very linked to the coin supply, as this is this design of how the economy of that specific cryptocurrency actually works, including incentives for holders, whether you can stake it, which means pretty much getting a dividend from that coin, or if there is a burn mechanism, which actually means if there is a plan to limit or decrease the number of those crypto coins. And probably the most important one is the overall market sentiment, the mood of investors, which is actually influenced by a lot of factors considering news, regulation, the state of the economy, and it looks like most importantly, Elon Musk and Donald Trump. But honestly, this crypto space has gotten to the point where if you ask yourself, who is investing in crypto? Well, you could pretty much argue every single person on earth. There are retail investors from all ages and all backgrounds. There are professional investors, meaning funds and ETF managers such as BlackRock, and even Grayscale, which is one of the pioneers in creating an ETF for crypto. Then you also have independent companies such as Mara, which is a Bitcoin mining company, but also MicroStrategy, which is a company that does not have any operations related to cryptocurrencies. However, all the income that they generate, they transform their treasury from US dollars into Bitcoin, which overall has proved to be a successful strategy for them. And last but not least, and more surprising, is actually governments. The US, China, UK, and most importantly El Salvador, which was one of the main early entrants into this space, are actually converting a big chunk of their treasury from their local currency into cryptocurrencies, which is a huge step for this as it means that they are now backed by the government. So if I had to rate this investment, I would give it a 5-star out of possibility of return, a 5/5 for possible risk, and a time frame where you can either choose to have it long-term, short-term, or just mid-term. If we were to compare the short-term performance for the crypto cap versus the S&P 500, and by crypto cap, I mean the entire value of all cryptocurrencies that currently exist, then this means that the S&P would have had underperformed the cryptocurrency market cap by over 30 percentage points. But when this actually gets crazy is when we zoom out even further. The crypto cap in 5 years has returned over 1,100%, while the S&P 500 has only returned 100%. And again, this is because crypto represents a belief in a new system, and right now there is an ever-decreasing belief in governments due to the outstanding amount of national debt, geopolitical tensions, distrust in politics, and all those factors combined. And just to put a quick comparison, if we were to compare total returns by strategy, it is clear that cryptocurrencies are the obvious winner. However, if we were to also compare the volatility, which is measured in standard deviation, and we can also see that cryptocurrencies are again a lot more volatile than the S&P 500, which in this case, it looks like the higher risk, higher return belief is actually being met. But then it got me thinking because there are a lot of different ways you can invest in cryptocurrencies. And the thing is that investors who chose these different types of investments would have had such different returns in the same time period that it's not even fair. Here we're comparing 5 types of investments to cryptocurrency. Number 1, crypto total is the whole market cap. Imagine you bought a little bit of every single coin in the cryptocurrency universe. Then you would have obtained a 1,146% return in 5 years. If instead you would have only chosen to invest in Bitcoin, well, you wouldn't be too far off. You would have gotten a return of 1,078% in only 5 years. But now imagine you create the S&P 500 of cryptos, which is the crypto top 10 ETF. Well, surprisingly, this would have returned a 616% return in 5 years, which is an incredible return. However, it is almost half of the crypto total or the Bitcoin return, a very big difference. On the other hand, imagine you invested in an ETF which contains every single coin in the market except for the top 10 in terms of market cap. Well then, your return would have been even lower, close to a 500% return in 5 years. And last but not least, imagine you invested in Crypto Major, which is an ETF that contains the 4 largest cryptocurrencies back in 2022. Well, it looks like your returns would have not been too good because you would have even been underperforming the S&P 500. Now, I wanted to indicate this just to show you the amount of variability that there is even with the same asset class. So you have to be smart when choosing if to invest in cryptocurrencies. And this is mainly been caused because you can now invest in the top 5, top 10, top 500 cryptocurrencies just like you can with stocks. So it has become more diversified, passive, and regulated. Now, one thing that interested me is the timeline of market developments on how this market has actually gotten so attractive over time. In 2009 was the first ever mining of a Bitcoin block called the Genesis block, and this is what started the whole thesis for Bitcoin actually becoming useful. 2010 marked the first real-world Bitcoin transaction, which is the story that we spoke about at the start, which is called Bitcoin Pizza Day. 2015 is when Ethereum actually launched, and this introduced smart contracts. This was groundbreaking because it showed us that cryptocurrencies weren't only a form of payment. The technology behind them, blockchain, actually had a lot of different uses which could be exploited in different ways. 2021, just after COVID, are the famous years where NFTs went mainstream. And this is mainly important because it brought a lot of attraction to the crypto universe. A lot of people started paying attention to it because of NFTs. And that led to 2024, which is where spot Bitcoin ETFs were approved. And this allowed for mass adoption and for everyday investors to be able to own a little bit of the crypto space. However, as with any kind of investment, it has a lot of success stories, but since especially crypto is a very new type of investment, it also has a lot of setbacks. Here are highlighted some of the successes. For example, the US establishing a strategic Bitcoin reserve, tokenized assets surging over 260% in 2025, even countries such as Bhutan mining Bitcoins in a very sustainable way, which is one of the main criticisms that cryptocurrencies actually have, and even USDT and USDC, which are stablecoins, hitting record market caps amid global uncertainty, so this is becoming some sort of safe haven. Now, on the other hand, we are seeing on a weekly basis headlines like the following. Crypto heist leads to $243 million theft and real-world kidnapping. Friends records its 10th crypto kidnapping this year. Meme coin mania backfires as projects collapse in 2025. And last but not least, 62% of respondents say crypto fraud is unacceptably high. Having said that, I do believe that cryptocurrency is a good investment and that it will be here for a long time, as it has a high return potential, a high risk level, a time frame where you can choose whether you're in it for the short term or for the very long term. Now, it has very high max drawdowns and volatility, but you're able to generate income by staking some of your coins. And the accessibility, I would give it a medium grade, as there are now ETFs. I would mainly recommend cryptocurrencies for investors with high risk tolerance, or for those more medium risk tolerance investors, I would recommend you, if you're going to invest in cryptocurrencies, to only allocate a very small percentage of your portfolio. And I do like the thought of investing in cryptocurrencies, as it has many benefits against the usual investment classes, as it can hedge against currency devaluation. It is a diversification measure as it has very low return correlation with stocks, with bonds, with commodities. Then it also gives you access to emerging technologies, because you can invest in different coins which may actually be the future of different kind of processes. And now I would recommend potential investors in Bitcoin to have some of the following characteristics. Investors that can afford medium-term illiquidity, then you have to be emotionally resilient. To see your portfolio down by a lot has to be tough. And last but not least, you have to have secure tech habits, because there are a lot of scams, a lot of fraud, and as we have seen, even kidnappings, where you have to be sure and secure with all your information in this space. Now, I came into this video believing that cryptocurrencies had no space in my portfolio. However, analyzing the current situation of the world with higher geopolitical risk, higher uncertainty, less trust on nations worldwide, and just a rising and ever-rising level of national debt, I believe that we will get to a point where governments, and especially central banks, will start printing out money, will start touching the interest rates, and will just start playing with our hard-earned money. Well, I see cryptocurrencies as a way of hedging this risk and just taking monetary intervention out of the equation. So I am actually interested in owning some cryptocurrencies for the very long term, and I have to do some sort of due diligence in order to choose which method I will actually follow for the long term. Now, if you've stayed until the end of the video, thank you, you're a legend. Please let me know in the comments if there are any other alternative investment classes that you would like to see. We will be dropping some of these videos on a weekly basis, and if you have any other series ideas, please let me know. However, as always, thank you for watching. This has been the Cashflow Compounder. Join the free Patreon for extra content, and I'll see you on the next one.